Hi and welcome to the weekly market news video. My name's Ian Coleman and I'm going to be your host for the next 15 minutes. To give you a little bit of background about myself, I've been involved in the foreign exchange market for 35 years. I hold the diploma from the STA, which is the Society of Technical Analysis. I believe I have quite a unique way of trading predominantly currency markets using single currency baskets. I would say I'm 90% technical, 10% fundamental. I look for setups, but I also understand that we need news drivers to get impulsive moves in single currencies. In this video we're going to talk about what drove the markets last week, what setups I was looking at. We're also going to talk about what's potentially going to move the markets this week. We are quite light on the calendar, but we do have the German elections overnight. So the focus is going to be what has happened, what drove the markets, and potentially what's going to happen going into this week. So first of all, I want to get to the charts. I want to talk about the Japanese yen. That was my focus probably for the last 10 days. That trade has now played out. We're also going to talk about crude oil. We're going to talk about DXY, which is the dollar index, and where that is standing at the moment. That could hold some quite nice setups for dollar crosses next week. Predominantly New Zealand dollar and the Aussie dollar. We're also going to look at the euro, the single currency basket, euro sterling and euro Aussie, and then finally every retail trader's favourite product. We'll finish by looking at gold. So let's get to the charts, and we're going to look at the single currency baskets, but we're going to start with the Japanese yen. Now, what drove the Japanese yen to the upside? Well, the Bank of Japan has got a lot more flexible with regards to its monetary policy. There are concerns about inflation, and in particular there are concerns about wage growth. Okay, that's sort of getting not out of hand, but it's definitely getting to levels where the Bank of Japan is starting to feel uncomfortable. So what we have seen over about the last 7 days is quite an aggressive move to the upside in the single currency, and this is the Japanese yen basket. And just to highlight what I was looking at last week, or like I said, it was about 10 days ago, so about 7 trading days, is this level here, okay, which is 6505. So it's a pivot. I'm looking for areas where we've seen a lot of support and resistance. We've seen a lot of price action. What has a tendency to happen is that smart money focuses on those areas where cash has been left, basically. And if we just expand this chart, we can see here, going back all the way to August 2024, and again September, but most importantly is this spike here. So it's a doji style candle, it's moved to the upside, it's left a bit of cash around here, and then we've had this volatile price action. Then the system setup was actually to buy into this dip in the Japanese yen. Now, when we reflected that back onto all our yen crosses, the one that showed the most promise, if you like, was the sterling against the Japanese yen. And here again, this is the daily chart. We can see that this area sort of mirroring the yen basket, obviously in the opposite direction, showing resistance here, and then a nice spike down to support here, and then here holding as resistance. And the level that we had was actually 193.03 was the average of these support and resistance levels. Let's go to this chart, even though I've got this on an hourly. This was basically the setup that we looked at. Hope it doesn't look too messy for you. So 193.03, like I said, was a previous swing high, and we could, if we go back, if we keep on drawing back the time frames, we can see that this level was quite pivotal. We put a Fibonacci retracement tool onto the chart that highlighted a 78.6% pullback level at 193.11. Why is that important for me? Well, I'm looking for areas of confluence. Okay, so confluence is where more than one thing happens. There's more than one reason for traders to either exit trades or potentially have a sentiment change. So instead of being bullish, flipping to bearish. And I look at chart formations not just on an Elliott Wave basis, but also cipher pattern analysis. So cipher pattern is the use of fib levels, same as Elliott Wave, but fib levels to eventually form what is known as symmetrical patterns or cipher formations. And this one highlights a butterfly formation. So we move to the upside again in 5 waves. What does that tell us? Well, after a bullish 5 wave move to the upside, we know that we should then see a corrective move lower. When we combine Elliott Wave with cipher pattern formations, and again going back to this correlation study, it often gives us really good setups for support and resistance. So the idea was to finish or sell the end of this 5 wave count at this pivotal resistance level 193.03, and then look for this corrective move to the downside. Now my target was this previous swing low, which is over on the left hand side, 189.39. What I was wary about was the potential of a bullish reverse head and shoulders pattern, and for that, or this BC leg to be limited. So we got out a quite nice R. The risk reward rate was 3.4, and we locked in profit. We did see a move to the upside, but that has actually been reversed, and we're actually seeing continued lower lows and lower highs. So there's no clear indication of a change of trend in this currency cross at the moment, but there is potential to move higher to form this butterfly formation, 196.74. So that was one of the trades last week. We'll quickly go through the oil trade, because that's not a typical setup. We didn't have obviously the single currency baskets to drive that product, but that was also quite a decent setup. I'm going to move it back to 120 just so you see this chart again a little bit better. And this is actually trading the completion of the cipher pattern instead of actually trading into the completion of the cipher pattern. So very mixed and volatile trading when you look at the daily chart, but $73.03 was a pivotal level. So we kept on using it as support, then resistance, support, then resistance. It's leaving money around that zone. And what we can see, just a little bit of history, ending wedge pattern, a 5 wave impulsive move to the downside, choppy move lower, and then this move higher. If we put a fib tool on here, this forms a bat formation at 73.03. It's a pivot level, and then we've had that aggressive downward move last week. So that's basically what did happen. Now we want to talk about the calendar for this week, what potentially can happen. I'm looking at euro. We've got as I said earlier, we've got the German elections overnight. I'm looking for a move higher in euro, but I'm also looking for a move higher in DXY, which is the dollar index. So euro against the US dollar is probably not the major dollar cross to play next week, and that's why I said the emphasis, I believe, is more likely to be on Aussie dollar and New Zealand dollar, but we are going to look at the euro as well. So let's just talk about what's coming out next week. So German national election overnight, Monday is a pretty quiet session. We've got the German IFO. Tuesday is again very limited US Richmond Fed. Wednesday we could see some volatile price action in the Australian dollar. We've got the inflation data, CPI, consumer price index. Thursday we've got ECB minutes, so again our focus will flip back to the euro around that time. We've got German unemployment, we've got US GDP, but it's a second estimate, so that is unlikely to gain too much interest from institutional traders. We've got the Japanese CPI on Thursday, and then Friday we've got German retail sales, French German flash CPI, so second tier data, US PCE. So not really that much to look at this week, with regards to sort of really high tier data. What we have seen towards the end of last week, well on Friday, was a breakout of a range in the US 30, which is the Dow Jones. What normally happens if the Dow moves to the downside, we will see traders buying risk assets, which are the US dollar and the Japanese yen. So one of the single currency baskets that I want to concentrate on, as I said earlier, is DXY. Let's get to that chart and have a look at that single currency basket. I want to go to this time frame first. So this is the daily chart, again using Elliott Wave formation. We look to be moving lower within this third leg. We have seen a slight breakout of a bearish flag formation and continue to move lower. Friday, limited price action really. I know a lot of analysts or traders will be saying, well, you know, the dollar was bullish on Friday. Look at euro dollar moving to the downside. Not really. It's in the lower half of Thursday's range. That's what's known as an inside Arami candle. It actually highlights the lack of upside momentum. So it's a candle that really should be ignored, or it should be shown as what it is, which is basically indecisive price action. It's neither bullish nor bearish as far as I'm concerned. As we get down into a shorter time frame, it's really the 2-hour chart that I'm looking at. Okay, I've got a 261.8% extension level located at 105.42. Elliott Wave analysis highlights the completion of a 5-wave count around about the same level. Okay, 105.43. We've even got inside waves. That price action there, wave 3 to 4, that indecisive inside candle on Friday, is basically just a 4th wave correction as far as I'm concerned. So what this chart is telling me going into next week is that really there's scope for further losses in the DXY, the dollar index, but that we should actually be looking at buying dips in the dollar. Okay, so reflecting that back, and what I have a tendency to do on my watch list is have all the Japanese crosses in one basket, all the dollar crosses in another watch list, euro crosses in another watch list, etc., etc., just so that I'm not clicking through lots of different charts when I'm predominantly focused on one single currency. So US dollar going into next week, we're going to be looking at let's look at the euro against the US dollar first. Looking at an ascending triangle formation. So this is the daily chart. Here we've got resistance, previous resistance 105.33. Again, you can see this level as being pivotal. So with the bias in the dollar index being to buy into dips, it should be to sell into rallies for euro against the US dollar. However, with the German elections, I believe that the euro could be stronger compared to most of the other base currencies. So the two currency pairs that I would focus on with regards to buying a dip in the US dollar and selling rallies in the cross, or the dollar cross, is Aussie dollar. So here I believe we're going to complete a fourth wave around about 0.6434, and the New Zealand dollar, where I also have a resistance level. Let's just get to the other chart. Here we are. This is the 8-hour chart, and a nice supply zone as well with regards to New Zealand dollar, so selling around about 0.5802. So just to talk or reiterate what we've spoken about in today's weekly video, we've talked about what was driving the markets, or currency markets really, last week, which was the Japanese yen, higher yen on a more relaxed fiscal policy from the Bank of Japan. What I believe will be driving price action this week, so the German election, higher euro against probably sterling, and euro against the Aussie, and then going on later into next week is basically buying dips in the dollar. And the two currency pairs that I would favour to play for that move would be short New Zealand dollar and short Aussie dollar. Okay, all the best of luck, and I'll be back next week with another video. Many thanks.